Hi, I'm Monica Knight. Today I'm speaking with Executive Directors Angus Gluskie and Seddon about Whitefield Industrials' year-end result for the year ending March 2026. Whitefield Industrials has been investing through all cycles of the Australian economy for over 100 years. Angus, what can you tell me about operating profit for the year?
All right, operating profit after tax for the year amounted to $21 million. So that equates to 17.5 cents per share. Now those earnings are slightly below our earnings in the prior year. And to explain those movements, it's worth appreciating that in the prior year, we did receive a number of special dividends, which weren't repeated in the current year. In addition, our strategic positioning saw us with a slightly lower exposure to high yield stocks and a slightly higher exposure to unfranked dividend payers, and that results in an increase in our tax expense. More favourably, we did see that over 65% of the companies we're invested in increased their dividends over that year. And I guess that shows a level of strength, underlying strength in the Australian economy over that 12-month period.
And the next dividend has been confirmed for June. Will that be at the same level as the prior year?
Yeah, so the half-year dividend is 10.5 cents per share fully franked, which brings total dividends for the full financial year to 21 cents. And that's equating to a 6.2% gross yield, so that's inclusive of franking, on the current share price.
Turning now to investment returns, the total portfolio return for the year was 2.7%. Can you talk us through that result?
Sure. So it's worth bearing in mind that 12-month period started with the market highs right before Liberation Day back in April 2025, and it finished with the early influences of the Middle Eastern conflict. And it's also worth bearing in mind that despite that quite noisy period over the last 12 months, if we extend across a 3-year period, the average return of the portfolio was just shy of 10% per annum.
And the investment return was higher than the ASX 200 Industrials benchmark?
That's right. Across that 12-month period, the portfolio was 65 basis points ahead of the benchmark. And that means the portfolio is now ahead of benchmark over the 1, 3, 5 and 40-year time periods.
And when we factor in franking, returns are higher again?
Yeah, that's right. So if we use the 3-year period as an example, the portfolio performance was 9.8% per annum. And then if we calculate that again using the asset backing of the company, which is after all expenses and also including dividends and franking, that outcome comes in at 10.6% per annum. So it's an extra 80 basis points above the portfolio.
And the US-Iran conflict has been a dominant concern for markets around the world in recent months. How has that affected your thinking on the outlook?
Well, conflicts cause uncertainty for markets, and in this case, it's added to costs for consumers and many businesses. And understandably, markets initially sold off in the face of those uncertainties. It is worth bearing in mind, though, that it's in the interests of all parties involved to arrive at some sort of resolution, one way or another. And ultimately, I think, as that occurs, this should be a favourable driver to markets.
Angus, are you still comfortable with the outlook for the Australian economy?
Well, it's worth remembering that unemployment in Australia remains low at the present time. Construction and infrastructure activity are firm. Business, healthcare and education services are all in demand. So while we do appreciate that the Middle Eastern conflict and the impact through rising costs on consumers is out there and can be a concern, ultimately these factors do get resolved. It is a time of significant change, but the Australian economy is reasonably well positioned to deal with that.
That brings us to the end of the update. From all of us here at Whitefield, thanks for watching, and we look forward to providing information on future results.
Cool.